Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 130th webinar, 130th CP program organized by AASP of ICI this year. The topic is very relevant today, that is the agreeing the terms of audit engagements relating to SA 212. We all are aware that this essay is very important in these days, and in order to tackle this very important topic, we are having with us from our own chartered accountant fraternity, very learned, very respected, C. Amit Purohit ji. So on behalf of AASB of ICI, I extend my warm welcome to you on this 130th CP program organized by AASB of ICI, sir. So we all know the topic is very important. And before I request Amit ji to deliberate, it is my proud privilege to share with all of you the brief profile of our today's learned speaker, C. Amit Purohit ji. C. Amit ji is a partner in NMK and Company LLP Chartered Accountants. Amit ji is a commerce graduate from Mumbai University, fellow Chartered Accountant from Institute of Chartered Accountant of India, Institute of Company Secretaries from Institute of Company Secretaries of India, and holds diploma in IFRS from ACCA UK and has completed certification course on Indians from Institute of Chartered Accountant of India. He is practicing in audit and assurance services, gap conversion, drafting and advertising on internal financial control, corporate advisory services, taxation, domestic and international both, structuring cross-border investment, international taxation issues, and foreign exchange regulations, etc. As far as the various past and present activities are concerned, he is a co-convener of the Accounting and Auditing Committee of the Bombay Chartered Accounting Society. He is a co-opted member of India's Implementation Committee of the Institute of Chartered Accountant of India and India's Technical Facilitation Group IFG for 2019 and 2020. He is a technical review for Financial Reporting Review Board of India, Financial Reporting Review Board of ICAI, and Privilege Reviewer also. He was a member of Managing Committee of the Chamber of Tax Consultants, and he is the author of publication on tax audit and other certifications published by CCH. He is a member of study group constituted by ICI on formulating guidance note on service sector, service concession arrangements, and he has led discussion on various topics of various meetings, seminars, webinars organized by professional organizations. He has contributed articles for professional journals and newspapers on topics of professional interest. He has given so many lectures and webinars and virtual CP meetings during the COVID as well as during these days on various platforms organized by Institute of Chartered Accountant of India. So list is still very vast. So without wasting much more time, once again I welcome you, sir, on this 130th CP program organized by AASB of ICI. And I request Amit sir to please enlighten all of us on various intricacies on today's standard on auditing on this topic SA 220. Over to you, Amit sir, please.
Okay. Thank you, Anilji, for a very kind introduction. You have been really kind enough to share my.
Sorry, I have mentioned SA 220, SA 210, sir.
SA 210, yeah.
Yes.
Yeah. So let me begin my presentation.
Yes, sir. Visible, sir.
Yeah. Just a moment. I'll just share again.
Yes, sir.
Now, I guess you all will be seeing the screen now.
Yes, sir.
Yeah. Hello and good evening to all the participants who have joined for this virtual CP meeting. Friends, it is my pleasure to be with you this evening to make a presentation on SA 210, which is on agreeing the terms of audit engagement. Before I begin my presentation, I would like to thank the AASB of ICI for giving me an opportunity to deal with this subject and for making this presentation. Friends, as you are aware, unlike compliance of accounting standard, where there is a shared responsibility between the auditors and the client, In case of responsibility of standards on auditing, the responsibility solely lies with the auditor to comply with the applicable standards and while discharging his duty on as an auditor. Whenever we take up any audit assignment, there are always stages that is carried out, like the planning phase, the execution phase, the completion phase. So there are different stages of audit life cycle, and we have different standards of auditing dealing with different stages of audit assignment and also dealing with different aspects of audit. These standards on auditing guide auditors regarding documentation, the audit processes which he has to follow, the procedures needs to be followed by the auditor during the audit assignment. Now, talking about SA 210, which is the subject matter of today's meeting, so far as SA 210 is concerned, this standard generally deals with the pre-execution stage of the audit. However, it also gives guidance as regards certain situations which may arise during the course of the audit. As the name of the standard suggests, agreeing the terms of audit engagement with the management is the precursor or the first and foremost process to be followed by the auditor before he actually begins his audit. It establishes the agreement and understanding with the management as regards the of the audit, how the audit would be conducted or carried out, what would be the deliverables from the auditors as well as from the management. So it will also mention the responsibilities of the auditors, the responsibility of the management for audit. What would be the preconditions for the audit which the management has to understand, accept, and acknowledge. Now, friends, we all know that any audit process would begin with receipt of appointment letter from the client. So that is basically the first stage when the audit starts. Now, upon receipt of the engagement appointment letter from the client, the auditor would start preparing the engagement formalities, like preparation of the audit engagement letter. Say, for example, in case of companies, the engagement formalities would encompass receipt of appointment letter, preparation of engagement letter, filing of Form ADT1 with the ROC, client acceptance memorandum, review of the client acceptance by the auditor. So in this pre-execution stage, audit engagement letter forms a very, very core of the audit process. It is basically the main document, which it is like an agreement between the two parties, and it forms the core of the beginning of the audit engagement. Now, this engagement letter is an important working paper and evidence regarding compliance with the standards on auditing, especially SA 210. What happens is, there is a draft of the audit engagement letter depicting various terms and conditions on which audit would be carried out, what could be the responsibilities, like I mentioned before. The said draft would then be exchanged with the management for their agreement and signature. Once the client signs the engagement letter, it's completed. Normally, which arises sometimes is whether the engagement letter is required to be executed for all types of audit, like statutory audit under the Companies Act, statutory audit under, as you all are aware, LLP Act also stipulates audit if there are certain thresholds are crossed. So there is also a concept of statutory audit under the LLP Act. Bank audit, insurance audit, tax audit, audit of the partnership firm or sole proprietary firm. So these are the various kinds of audit which we as chartered accountants conduct. So the question is whether do we need to obtain audit engagement letter in all such cases? The answer is resounding yes. Yes, we need to obtain the audit engagement letter. Now, before we dive into this particular standard, Let me tell you, friends, this standard is quite simple, and we all are familiar with with this particular standard because we deal with this standard in our day-to-day practice. However, let us understand some of the nuances standard in this particular presentation. I will first complete the presentation, and we'll have ample time for Q&A session thereafter. Now, with this background in mind, let us have the presentation on this particular standard. Now, what are we going to cover in this particular presentation? We will cover the scope. What is the scope of this particular standard? What does it envisage? What is the effective date from which this standard has come into effect? So we'll also learn about that. What are the objectives? This is very important. What are the objectives behind formulating this particular standard on auditing? What are the requirements which are mentioned in this particular standard? What are the preconditions for an audit? Now, this term preconditions for an audit is a very important term under this particular standard. It is a typical term which comes under this particular standard. Then we are also going to understand about the agreement on the audit engagement terms. What are the items on which there is to be a common agreement between the auditee and the auditor? Then what happens during the recurring audits? Now, whether I need to obtain audit engagement letter only at the time of initial appointment, or whether I need to obtain engagement letter for each year during the term of my engagement. So we'll deal with all these things. Then we will also deal with acceptance of a change in the terms of the audit engagement. So we'll deal with certain scenarios where management want certain changes in the terms of the engagement, maybe at the initiation of the audit or during the course of the audit. So what happens if there are certain changes in the terms of audit engagement during the course of the audit? So we'll deal with all these scenarios, and we'll also deal with additional considerations which the auditor has to keep in mind during the engagement acceptance. So this is the gamut which we are going to cover in today's presentation. Now, SA 210 is effective for audit of financial statements for period beginning on or after 1st April 2010. Now, if you see the underlying term, which is audit of financial statements. Now, this essay is applicable to audits, and audits of what? Audits of financial statements. So the focus here is on the audit of financial statements. So many times we have to do certification work also for our clients. Now, the question would normally arise as to whether do we need to obtain engagement letter for such certification work? The answer is again yes. Even for certification work, we have to obtain engagement letter. Further, the ICAI has also come out with a guidance note on reports or certificates for special purposes. It also gives guidance on obtaining engagement letters for such certification matters. And I would request the participants to go through the guidance note in this regard for the guidance on obtaining engagement letter for certification work. So we have dealt with the first bullet. Now, SA 210 deals with auditors' responsibilities in agreeing the terms of the audit engagement with the management. So this standard dwells on what are the responsibilities of the auditor in agreeing the terms of the audit engagement with the management, while where appropriate, those charged with the governance. So for the purpose of our today's discussion, we may use these terms interchangeably, but mostly we will use the term management. Then, what is the main objective behind formulating this standard? The main objective is to establish whether the preconditions, and we will understand the meaning of precondition in the subsequent slide. So again, the main objective is establishing whether the preconditions for an audit are present and confirming that there is a common understanding. So this is very important. There has to be a common understanding between the auditor and the management. So auditor and auditing. So there are three things rather. First is there are preconditions which are present, and we will understand the meaning of preconditions in the subsequent slide. Then there has to be common understanding between the auditor and the client on the terms of the audit engagement. So that is the objective of this particular standard. Now, let us understand the meaning of preconditions. Now, precondition means the use by the management of an acceptable financial reporting framework in preparation of the financial statements and agreement of the management or those charged with the governance to the premise on which the audit is going to be conducted. So there has to be a common understanding between the auditor and auditee on the acceptable financial reporting framework for preparation of the financial statements. The auditor and the auditee have to come to a common ground regarding the acceptable financial reporting framework, which is going to be used by the management in preparing the financial statements, and the auditor is going to audit the financial statements based on the acceptable financial reporting framework. And the premise on which the audit will be conducted. Then let us understand the meaning of the applicable financial reporting framework. Now, financial reporting framework adopted by the management and TCWG for preparation of the financial statements that is acceptable in view of the nature of the entity and the objective of the financial statements, or that is required by law or regulation. Let me repeat it once again. It is the financial reporting framework adopted by the management in preparation and presentation of the financial statements that is acceptable in view of the nature of the entity, the nature of the organization, the objective of the financial statements, or that is required by law or regulation. So friends, let us pause here for a moment and let us understand this financial reporting framework in practical terms. So broadly, there are, if we were to generalize the financial reporting framework, so there are two categories: general purpose financial reporting framework and special purpose financial reporting framework. A general purpose financial reporting framework is designed to meet the common financial informational needs of wide range of users. The financial reporting framework may be fair presentation framework or compliance framework. So the general purpose financial statement framework would cater to the needs of various stakeholders like the shareholders, the creditors, the management, the shareholders, the government regulators, the tax authorities. So these are the stakeholders who would rely on the general purpose financial statements. And if the financial statements are tailor-made to suit the requirement of a particular regulator, or if the management wants a financial statement to be prepared for certain purposes, then it will be a special purpose financial statements. Again, there will be two categories like fair presentation framework and compliance framework. So presentation framework is used to refer to financial reporting framework that requires compliance with the requirements of the framework, and it acknowledges explicitly or implicitly that to achieve fair presentation of the financial statements, it may be necessary for the management to provide disclosures beyond specifically required by the framework, or it also acknowledges explicitly that it may be necessary for the management to depart from the requirement of this particular framework to achieve fair presentation of the financial statements. Such departures are expected to be necessary only in extremely rare circumstances. So the framework which is not fair financial reporting framework, it will be treated as compliance framework. Now, friends, we have different kinds of financial reporting framework. The easily available example would be the accounting standards issued under the Companies Act. So now, friends, as you all are aware, so far as companies are concerned, there is a two-tier financial reporting framework. There are two types of financial reporting framework. One is the companies which are covered under companies accounting standard rules. Other are those companies which are covered under companies Ind AS rules. So if the company falls under the criteria specified under Ind AS rules, the company will have to prepare its financial statements based on Ind AS rules. Otherwise, for all other companies, the companies would be following the accounting standard regime, which are issued under the Companies Act. Now, this was so far as the companies are concerned. What happens to other entities like LLPs, like partnership firms, like sole proprietor firms, or other commercial entities? Now, for them, let us take the example of partnership firm or LLPs. Now, for them, the Act does not prescribe any financial reporting framework. However, the institute has come out with its own accounting standard, the set of accounting standards, and they prescribe they give the guidance on the various accounting matters. So again, there are accounting standards from Accounting Standard 1 to 29 issued by the Institute of Chartered Accountants of India. So those standards would need to be followed by the non-company entities. Now, the third bullet. In order to establish the preconditions for an audit are present, the auditor shall determine whether the financial reporting framework to be applied in preparation of the financial statement is acceptable or not. So say, for example, let me give you a very practical example. Say, for example, a company is under Ind AS regime. So it is required to follow Ind AS accounting standards for accounting as well as for disclosures. Now, if the management wants to prepare the financial statements and various disclosures under AS regime, whether that would be an acceptable financial reporting framework for the auditor? No, it will not be acceptable financial reporting framework because the company is, that particular company is governed under Ind AS regime. So it is very important at the time of agreeing with the terms of audit engagement with the management that both the auditors as well as the auditee agree on the acceptable financial reporting framework, which is to be applied in preparation of the financial statements. Another important point, having agreed with the management regarding the acceptable financial reporting framework, then auditor has to also obtain the agreement of the management that it acknowledges and understands its responsibility with regard to preparation of the financial statements in accordance with applicable financial reporting framework. So far as the companies are concerned, it will be either under AS rules or Ind AS rules along with Schedule 3 of the Companies Act. And for such internal controls as management determines is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. So friends, as we all are aware that installation of internal controls is very important in any commercial organization. So if auditor is going to audit a particular entity, he will have a look at the internal controls which are established, which are installed by the management for preparation of the financial statements for various processes. Now, under the Companies Act, and also this standard says that installation of internal controls, the maintenance of the internal controls, the review of the internal controls on a regular basis is the responsibility of the management. So when the auditor executes this engagement letter, he has to obtain approval of the management or the acknowledgement of the management that, or the agreement of the management that responsibility for establishing internal control lies with the management. The auditor is only going to review the internal controls, efficacy of internal controls while conducting the audit. And if he is going to issue report on internal financial controls, he is going to review various standard operating procedures, and risk control matrices established by the management. So there are three things to recapitulate. One is agreement on acceptable financial reporting framework. Number two is preparation of financial reporting framework based on the internal controls established by the management. And third is to provide the auditor access to all information of which management is aware that is relevant to the preparation of the financial statements, such as records, documentation, and various matters. So now, in order to enable the auditor to conduct his audit in accordance with various standards on auditing, the auditor will require unrestricted access to all the information which the auditor deems it fit to obtain from the management or the relevant persons of the management. Then, during the course of the audit, the auditor may require additional information from the management for the purpose of audit. Now, for the purpose of, say, for example, for the purpose of consolidation financial statements, this would include the management of subsidiaries, associates, and joint ventures of the entities which gets consolidated. So, if the auditor is doing also audit of the consolidated financial statements, then he will have to also consolidate various subsidiaries in the group, the associates and joint ventures. Then he has a right to seek information and the documents from the management of these entities as well. So auditor will inform the management beforehand at the time of audit engagement letter that he may require certain information from the management during the course of the audit. The third one is unrestricted access to the persons within the entity from whom the auditor determines it necessary to obtain the audit evidence. So the audit would culminate in obtaining various documents which will be audit evidence. The auditor will also need to conduct certain meetings with the stakeholders of certain processes. So the management has to agree to give unrestricted access of the concerned persons within the entity so that auditor can conduct the audit in accordance with the standards. Now, what are the factors which affect acceptability of the financial reporting framework? The factors that are relevant to the auditor's determination of the acceptability of the financial reporting framework, which is to be applied in the preparation of the financial statements, would include the nature of the entity. So again, the financial reporting framework would depend upon the nature of the entity. So if there is a company which is governed under Ind AS, then it will the financial reporting framework would be Ind AS. For other entities, the framework may be accounting standard issued by the ICAI. It will also depend on the purpose of the financial statement. For example, whether they are prepared to meet the common financial information needs of a wide range of users or the financial information needs of a specific user. So whether it is a general purpose financial statement or specific purpose financial statement. So we also have a set of standards which deal with specific purpose, special purpose financial statements. Now, it will also depend on the nature of the financial statements. For example, whether the financial statements are complete set of financial statements or single financial statements, whether law and regulation prescribe applicable financial reporting framework. So friends, this bullet we have already discussed that there are three financial reporting, broadly there are three financial reporting framework prevalent in India. One is for companies, so there are two financial reporting framework which is applicable to company, and for non-company, it is the accounting standards which are issued by the ICAI. Now, friends, if the preconditions for an audit, we have already discussed what are the preconditions for an audit. So there are three requirements for preconditions of audit. If the preconditions for an audit are not present, then what are the steps to be taken by the auditor? Then standard gives the guidance and it says that initially the auditor will discuss this particular matter with the management. Unless required by the law or regulation to do so, the auditor shall not accept the proposed audit engagement. So if initially he will discuss with the management, if the management does not agree on any one of the preconditions of the audit, and if the auditor feels that he will not be able to conduct the audit in accordance with the various standards on auditing because some of the important preconditions of the audit are not present, then he will not conduct the audit. He will not accept the engagement. Or if the agreement of the management acknowledgement referred to above has not been noted. So say, for example, if the law prescribes that the auditor has to conduct the audit, then the auditor will conduct the audit. Otherwise, if there is no mandate under the law, then auditor will not conduct the audit because there are preconditions which are not present in this particular case. Now, friends, many a times there can be a scenario where the management may put certain conditions either at the time of the beginning of the audit or maybe during the course of the audit. So let us understand this particular slide. What happens when the management puts certain limitations on the scope prior to the audit engagement acceptance? If the management imposes limitation on the scope of the auditor's work in terms of a proposed audit engagement such that the auditor is under the belief that the limitation will result in disclaiming an opinion on the financial statements, then the auditor will not accept such a limited engagement as an audit engagement unless it is required by law or regulation to do so. So, friends, if at the beginning of the audit or prior to the audit engagement acceptance, if management put certain restrictions on the procedures which the auditor is going to follow, like confirmation of data or certain other procedures like physical verification, and if the auditor feels that these are the material items and if he is not able to follow the procedure and it will result in disclaiming of an opinion on the financial statements, then the auditor will not accept the engagement. Because as you are aware, disclaiming of an opinion on the financial statement does not serve any purpose. It means the auditor is not giving any opinion. He is disclaiming the opinion on the financial statements. The auditors are appointed to audit the financial statements and to give their opinion on the financial statements. If the limitations are going to result in disclaiming of an opinion on the financial statement, then the auditor would not accept the audit engagement. And at this juncture, let me tell you about the different audit opinions, like unmodified opinion. So we have got a separate series of essays on audit opinion. So there is an unmodified opinion, modified opinion, qualified opinion, adverse opinion, disclaiming of an opinion. So this particular standard, this particular paragraph says that if there is a disclaimer, if it is going to be a disclaimer of an opinion, then the auditor is not going to accept the audit engagement. Then the standard says that the auditor shall agree the terms of the audit engagement with the management, and having agreed, the agreed terms of the audit engagement shall be recorded in audit engagement letter or some suitable form of written agreement. So the standard says that having made the management understood what are the various audit engagement terms, what are the terms and conditions, what are the responsibilities of the auditors, what are the responsibilities of the management. Now the management has said, okay, we acknowledge the audit engagement terms, then this particular agreement has to be recorded in writing. Generally, we call this particular agreement as audit engagement letter or some suitable kind of a written agreement. Now, generally, this audit engagement letter on a practical note is prepared on the letterhead of the auditor. The auditor would mention all the terms and conditions of the audit engagement. The auditor would share the audit engagement letter draft with the management. If the management wants certain clarification or inputs on certain aspects of the audit engagement letter, the management will seek those clarification. The auditor will give his inputs on or the thought process behind those points which are coming in audit engagement letter. And finally, the auditors as well as the management will sign this particular audit engagement letter. It is like an agreement. It becomes an agreement on with the basis of which the audit is going to be conducted by the auditor. Now, what are the main points or main areas which are going to be covered or which should be covered in any audit engagement letter issued by the auditor? And the standard says certain points about them. It says that a typical audit engagement letter should include the objective and scope of the audit of the financial statements. So it should clearly recite what is the objective behind conducting the audit, what would be the scope of the audit, whether it will be under the Companies Act or some other act. So it has to clearly recite the objective and scope of the audit of the financial statements. It has to clearly establish the responsibility of the auditor during this particular audit process. It will have to also mention what are the responsibilities of the management for the audit. It will also identify the applicable financial reporting framework for preparation of the financial statements. It will also give a reference to the expected form and content of any reports to be issued by the auditor. So friends, as we all are aware, standards on auditing clearly deal with the form and content of the audit report. We have got a series of standards on auditing beginning with SS 700 on what are the contents of the audit opinion. So if the auditor will clearly mention in his engagement letter that our audit report will be in accordance with SS 700 and related standards, and there can be situations in which the audit report will need to be amended or modified. So these are 5 important factors which should form part of any engagement letter. Now, friends, the next question which would arise is whether, as an auditor, do I need to take the audit engagement letter every year, or if my appointment. So, say for example, in case of companies, the appointment term is 5 years, a block of 5 years, and the appointment terms will be subsequently also it will be for 5 years. Now the question would arise is that I have executed the engagement letter in the first year. Now in the second year, do I need to again obtain the audit engagement letter from the management or not? And friends, as you are all aware, there is a change in the Companies Act. Initially, there was a provision which stated that the audit term would be 5 years. It is, same even today. However, there was a case of management accepting the ratifying the appointment of the auditors each year during the block of 5 years. So there was each year, there was a ratification by the board of the auditor's appointment. Ratification by the annual general meeting. Now this ratification is no more there. Then the question arises whether I need to obtain the audit engagement letter on a regular annual basis or not. So let us read this particular slide and we'll get the answer. On recurring audits, the auditor shall assess whether circumstances require the terms of the audit engagement to be revised and whether there is any need to remind the entity of the existing terms of the audit engagement. Following factors may make it appropriate to revise the terms or to remind the entity of existing terms. Any indication that entity misunderstands the objective and scope of the audit. So if there is any indication that the management is not able to appreciate or understand the objective or the scope of the audit, then the auditor may need to again issue the audit engagement letter. if there is any revised or special terms of the audit engagement, if there are certain changes in the terms of the audit engagement, then the audit engagement letter will have to be again revised and shared with the management. If there is any recent change in the senior management, so earlier the audit engagement letter was shared with the earlier management, now the management has changed. So the auditor would like to remind the management about the terms and conditions of the audit, and he may think of issuing the fresh audit engagement letter. If there is any change in the ownership of the company, then the auditor may think of issuing fresh audit engagement letter. If there is a significant change in the nature and size of the audit, entity's business, a change in the legal or regulatory requirements. So, friends, let me give you one example on this particular point. So say, for example, if there is a company and during the second year of the appointment, the provisions of internal financial control reporting by the auditors are applicable to the company under 143.3. So this is a very significant change, because now the auditor will not only have to issue the normal audit report which he has been issuing as per SS 700, but he will also have to issue separate audit report on the effectiveness of the internal financial control. So if the internal financial controls are applicable to the entity, then the auditor will have to issue a fresh audit engagement letter on IFC as well. A change in the financial reporting framework adopted in preparation of the financial statements. So say, for example, in the first year, in the initial years, the company was under the AS regime and the audit engagement letter was executed accordingly. But subsequently, the company has come under Ind AS accounting standard regime. Then the auditor will need to issue the audit engagement letter afresh, incorporating various requirements under Ind AS financial reporting framework, because it will be a significant change in the financial reporting framework or any other reporting requirements. So these are the factors. If there are these factors are arising during the course of the audit, then the auditor may think of issuing a fresh audit engagement letter. If there are no such indicators present during the term of 5 years, then the auditor can have one audit engagement letter also. Acceptance of a change in the terms of the audit engagement. Now, the standard says that the auditor shall not agree to a change in the terms of the audit engagement where there is a reasonable justification, where there is no reasonable justification for doing so. Some of the reasonable justifications are change in the circumstances, affective entities, requirements, or misunderstandings as to nature of your audit. So the standard is very clear that if the management wants to change any terms of the audit engagement which are not justifiable, then the auditor will not agree to those audit engagement. If before completing audit engagement, the auditor is requested to change audit engagement to an engagement that conveys lower level of assurance, auditor shall determine whether there is a reasonable justification for doing so. So if the management puts certain restrictions on audit processes, whereby the auditor will not be able to give his opinion on the true and fair view of the financial statements, and if it is going to convey a lesser level of audit opinion, then he will be inquiring with the management, and if there is no reasonable justification, he will not accept the audit engagement. Now, if the auditor is unable to agree with the terms of the audit engagement and is not permitted by the management to continue the original audit engagement, the auditor will withdraw and determine if the circumstances need to be reported to other parties, such as those charged with the governance, regulators, or owners. So if the auditor is resigning, then he will have to also see whether the circumstances require informing to various regulators or not, apart from the the management and those charged with the governance. If the terms of the audit engagement are changed and these terms are acceptable to both the auditors as well as the auditee, then the standard says that the auditor and the management, they both will agree on the new terms, and this new terms will be recorded in a fresh engagement letter or some kind of an written agreement. So there can be two scenarios where the terms and conditions are reasonable and the auditors agree to those terms and conditions. If those terms and conditions are reasonable, then there will be a fresh audit engagement letter incorporating those additional terms and conditions. And if the terms and conditions are not acceptable or are not reasonable, then auditor will not accept the audit engagement or he will resign. Now, what are the additional considerations in engagement acceptance which are to be borne in mind? So now the standard says that when the auditor's report is prescribed by law or regulation, then he needs to evaluate whether the users of the financial statements might misunderstand the assurance obtained from the audit of the financial statements, and if so, whether additional explanation in the auditor's report can mitigate possible misunderstanding. So friends, let me explain this point with a practical example. Now friends, we all do the tax audit and we know that there are two forms which are applicable. Either for tax audit, there will be a form 3CA or there will be form 3CB. Both are tax audit reports under the Income Tax Act 1961. In case of entities, companies, the form would generally be form 3CA. In case of non-corporate entities, the form would be 3CB. Now, these two forms have been prescribed, and these two forms represent audit opinion or audit report, and they have been specifically prescribed. The format has been given under the Income Tax Act for these two forms. Then the auditors needs to evaluate whether the format given under the Income Tax Act is fairly representing the requirements of SS 700 or not. If there are certain paragraphs which are not coming under form 3CA and 3CB, then what needs to be done? So then we can go back to the guidance note on tax audit, and it says that you put certain additional paragraphs in form 3CA and 3CB so that the users of the financial statements can understand the premise on which this audit was conducted. What are the responsibilities of the auditor? What are the responsibilities of the management? So all things, these paragraphs will need to be put in form 3C and 3CB. Now, if the auditor concludes that if by making these additional disclosures in audit report prescribed by the law and it is going to mitigate possible misunderstanding, then he will put these paragraphs. But if he feels that even by putting certain paragraphs or the law does not allow putting certain additional paragraphs in accordance with SS 700, then he will not accept the audit engagement. Now friends, in previous slide, we went through certain important pointers or certain important aspects which need to be covered in the any audit engagement letter. Now let us go into details regarding what are the contents which any typical audit engagement letter should contain. The first and foremost would be reference to the appointment letter. So friends, like I mentioned at the beginning of my presentation, that any audit engagement would start with appointment letter received from the client. Based on the appointment letter, the auditor would issue engagement letter. So in the very initial paragraphs of the audit engagement letter, the auditor has to give reference to the appointment letter because that forms the basis on which this engagement letter is being executed. So the reference to the appointment letter by the entity is very important. The reference to the period of the financial statements. Now, any appointment of the auditor would encompass auditing the financial statements for a particular period. So say, for example, if the auditor is appointed for 22-23 financial year, so the audit engagement letter has to be very specific in mentioning the period of the financial statements which the auditor is going to audit. That is a second important point which needs to be borne in mind while drafting audit engagement letter. Then the audit engagement letter should also give reference to the contents of the financial statements. So the engagement letter would say that the period of the financial statement would be from so and so to so and so. But what do we mean by financial statements? So audit engagement letter has to define the contents of the financial statements, like the balance sheet, the profit and loss account, the cash flow statement. These are the components of the financial statements. And if to a particular entity which the auditor is auditing, the auditor has to also do the audit of the consolidated financial statements, then the engagement letter would also mention the fact that the audit would also include the audit of the consolidated financial statements. Then very important, reference to the objective of the audit. Now this is very important. The auditor has to clearly bring out in the recitals to the engagement letter what is the objective of the audit, where he will have to do the elaboration of the scope of the audit, including reference to the applicable legislation. So say, for example, in case of companies, the auditor will give the reference of the Companies Act 2013, the regulations. If there is a listed company, the auditor will also give the reference of the SEBI guidelines, various standards on auditing issued by the institute, and ethical and other pronouncements of the institute to which the auditor adheres. So all this framework or the legislation or the regulations will need to be clearly spelled out in the audit engagement letter. Then a reference to the reasonable assurance and not guarantee. Now friends, this is very important. The client has to be told clearly that when the auditor is doing the audit, he is giving opinion on true and fair view, which is a reasonable assurance. It is not an absolute guarantee that the financial statements are free from material misstatements. So it has to be very clearly spelled out in the audit engagement letter that when the auditor is going to express his opinion on the financial statements, his opinion would give a reasonable assurance and not an absolute assurance or the guarantee. Then, like I mentioned before, the audit engagement letter should also include a paragraph on the responsibilities of the auditor. The primary responsibility of the auditor would be to comply with the standards on auditing while conducting the audit. So friends, now you all are aware that under the Companies Act regime, Companies Act clearly says that the auditor will comply with the standards on auditing. And which standards on auditing? The standards on auditing which are issued by ICAI. So it is clearly mentioned in the Companies Act that it will be responsibility of the auditor to comply with the standards on auditing. Then reference to the reporting to central government under section 143(12) relating to fraud. Now friends, Companies Act has got elaborate mechanism or provisions regarding the reporting of the fraud noticed by the auditor or by the management and informing the same to the central government. Now, the auditor, generally, auditor is required under the code of ethics, the auditor is required to maintain the confidentiality of the financial information of the auditee. However, in cases of fraud, the auditor is duty bound under the Companies Act 2013 to report the matter to the central government under certain circumstances. So the auditor has to clearly mention in his engagement letter that though we are bound by the confidentiality, however, under circumstances, we will need to, if there is a situation of a fraud, then we will need to report to the central government as required under section 143(12) of the Companies Act 2013. Then a reference to the responsibility of the management or those charged with the governance. Now, friends, Companies Act also cast responsibility on the management as regards the financial statements, as regards internal financial controls, as regards internal controls. So the auditor will need to still bring out this fact to the management that, look, these are your responsibilities for the purpose of audit, and these are our responsibilities. So there has to be a very clear demarcation between the two parties regarding their responsibilities. Then reference to the request for annual report, the auditor's responsibilities relating to other information specified under section 143(10). Now, friends, under the Companies Act and as per the requirement of SS 720, the auditor needs to look at the annual report prepared by the board of directors, which will include board of directors report and certain other disclosures. Normally, in case of private limited company, it would be directors report. However, in case of listed company, there will be so many disclosures, detailed, elaborate disclosures, including the board report. So the auditor is duty bound to see that if he has reported certain matters, however, in the board report, the same matter is not addressed properly, or if there is a divergence of views regarding that particular matter, then the auditor has to also report on such things. So the auditor under section 143(10) is, along with the requirements of SS 720, is required to obtain the draft board report before issuing his audit opinion, that the audit report, the draft audit report and the draft board report they both are in sync. So this will have to be clearly spelled out in the audit engagement letter that the auditor would be seeking the annual report or the board report from the management. Reference to the expected form and content of any reports to be issued by the auditor. So again, the engagement letter will mention briefly about the form and the contents of the report to be issued by the auditor. So as you all are aware, and we discussed also, that the format of the audit report or the contents of the audit report would be in accordance with SS 700 series. The requirement for the auditor to communicate key audit matters in the auditor's report in accordance with SS 701 on communicating key audit matters in the independent auditor's report. Now, friends, you all are aware that there is a separate SS 701 in 700 series which deals with communicating key audit matters in the independent auditor's report. At present, this reporting on SS 701 is applicable to listed entities. If the client is a listed entity, and if the auditor will be required to communicate key audit matters in his audit report, then the auditor has to clearly, at the time of executing engagement letter, mention in his engagement letter that the auditor will also be giving disclosure on certain key audit matters which they had identified during the course of the audit. Then the fact that because of the inherent limitations of the audit, together with the inherent limitations on the internal control, there is an unavoidable risk that some material misstatements may not be detected, even though the audit is properly planned and performed in accordance with the standards of auditing. So the auditor will clearly mention in his engagement letter that audit is not absolute guarantee that the financial statements are free from material misstatements. The auditor will clearly mention that the audit, any typical audit, will have inherent limitations. regarding the internal controls. So it may so happen that the internal controls may have been bypassed by the management. If they've been bypassed by the management, then there can be a risk of fraud. So if such cases are there, then there is a chance of material misstatement. So this fact has to be clearly brought out in the audit engagement letter. So the auditor will clearly say that the audit will be conducted in accordance with the various standards on auditing issued by the Institute of Chartered Accountants of India. However, in such scenarios where the controls are bypassed or if there is a fraud, then even though the auditor has properly complied with all the standards, still there can be chances of material misstatement. Then the agreement of the management to inform the auditor of the facts that may affect the financial statements of which the management may become aware during the period from the date of auditor's report to the date of financial statements are issued. Now, friends, there can be certain scenarios where after issue of audit report, there can be certain circumstances which may arise in which may be critical to the auditor's opinion. The auditor will clearly spell out in his engagement letter that if the management envisages certain matters to their notice after the issue of the audit opinion, they will clearly and immediately bring those facts to the auditor so that auditor can deal with this matter in accordance with the standards on auditing. So friends, we have got a specific standard on subsequent event issued by the institute. We also have got a separate accounting standard dealing with events occurring after the balance sheet date. But so far as accounting standards are concerned, they are dealing with the accounting treatment. However, the standards on auditing on subsequent event gives the guidance to the auditor as to the process or the procedure to be followed while identifying and reporting any subsequent event. The reference to the reliance of other auditors, like if any, like branch auditors or other experts or internal auditors. So if the entity where there are certain branch auditors or there are internal auditors, the engagement letter will clearly say that during the course of the audit and for forming our audit opinion, we will also rely on the reports of the branch auditors or reports of the internal auditors or experts. The reference to the matters to be communicated to those charged with governance. Now, friends, if you look at the standards on auditing, the standards on auditing also says that if the auditor identifies certain matters which should be brought to the notice of those charged with the governance, then the auditor will communicate those matters with TCWG. So the auditor has to clearly mention in his engagement letter that if they identify certain matters, then they will immediately inform the governance team. Then reference to the protective clauses on data transfer, work papers, etc. So the auditor will need to mention in his engagement letter that during the course of the audit, there can be data transfer and they will try to take reasonable care on the data transfer. It will be free from viruses and everything. Plus the working papers. The working papers is the sole property of the auditors. So auditors may or may not share those working papers with the management because it is the sole property of the work papers. So it will need to be clearly spelled out in the engagement letter. Then reference to the requirement of UDIN. So friends, as you all are aware, now for any attest function, we will need to generate the UDIN. Now, whenever we issue any audit opinion or any certification work is done, UDIN is mandatory. Now, when we generate any UDIN on the website of web portal of ICI, we need to key in or punch certain financial information or certain operational information of the auditee. And based on that, the UDIN is generated. The auditor will need to clearly mention in his engagement letter that there is a requirement to generate UDIN. And for that, he will be using certain data from the financial information of the auditee. Then there can be a clause on the basis on which the fees are going to be, audit fees are going to be computed, and any billing arrangements. So the engagement letter should include the amount of the fees which the auditor is going to charge for this particular assignment, and the frequency of the billing. So because this engagement letter is like an agreement between the two parties, so the terms of payment and the billing should be clearly spelled out in the engagement letter. Then the fact that the audit process may be subjected to a peer review under the Chartered Accountants Act 1949. So friends, we all know that if we do audit of certain entities, then we are covered under the peer review process of the institute. And during the peer review process, the peer reviewer will go through certain working papers of certain clients which he has picked up on sample basis. So because the auditors are bound by the confidentiality as per the code of ethics, the auditor will need to clearly spell out this fact in the audit engagement letter that they are subjected to the peer review, and the peer reviewer may review the audit working papers of the prepared by the auditor of that particular client. Any other legal requirements, for example, SEBI guidelines with regard to designation of statutory auditors from listed entities and their material subsidiaries. So friends, those who are doing the audit of the listed companies are very well aware that in case of listed companies, if the auditor is resigning, then there are certain processes to be followed by the statutory auditors. As per the SEBI guidelines, if the auditor is resigning within 45 days of the end of the quarter, then he has to follow certain processes. If the auditor is resigning after the 45 days of the end of the quarter, then he has to follow certain processes, like he has to complete the limited review of the previous quarter as well as the current quarter. So there are certain requirements under the which are given by the regulators. So all these requirements will need to be clearly spelled out briefly in the audit engagement letter. Then limitation on damages. So the auditor can clearly mention in his audit engagement letter that if there is any willful misconduct or if there is any negligence, what would be the extent of which the damages would be on the auditors. So because this is an agreement, so this limitation on damages will need to be clearly worded in the audit engagement letter. Then confidentiality matters, which we already discussed. Reference to separate engagement letter for audit under section 143(3)(1). So friends, typically, let us take an example of an entity, a company, which is a, say for example, which is a private limited company. So the auditor has executed the audit engagement letter. However, as you are aware, if for a particular entity, the provisions of internal financial controls are applicable, then there is a guidance given in the institute's guidance note on internal financial controls, because the Companies Act says that the auditor will also comment on the internal financial controls. So to aid its members, the institute has come out with the guidance note on internal financial controls, and this guidance note gives the format of the engagement letter which needs to be executed along with the normal engagement letter which we are discussing right now. So there will be two engagement letters to an entity to whom internal financial controls are applicable, a normal engagement letter, and there will be a separate engagement letter which will be in accordance with the format given under guidance note on IFC, and both these engagement letters will give cross reference of the other engagement letter. So I would request the participants to go through the format given in this particular guidance note so that they can implement this format for their clients. Then a request for the management to acknowledge the receipt of the audit engagement letter and to agree to the terms of the engagement outlined therein. So finally, when the audit engagement letter concludes, the auditor would request the management that you acknowledge the receipt of this particular engagement letter, which we have shared with you, and you agree and sign on the terms of this particular engagement letter. Because as we understand in general parlance, only when two parties agree, then it becomes a contract or agreement. So the auditor would request the auditee to share the signed copy of the audit engagement letter. Now, the question would arise, is with whom should the terms of the audit engagement letter be agreed with? Now, the standard says that the terms of the audit engagement would have to be agreed with the management or those charged with the governance as appropriate. In case of companies, those charged with governance would include audit committee, board of directors. In case of partnership firm, the terms need to be agreed with the partner of the firm. In case of trust, with the trustees and with the authorized representative in case of a branch or licensing office. So let us take the typical example of a company. So if there is a private company, the terms of the engagement would have to be agreed with the board of directors. However, if there is a listed company which has got its own audit committee, then these terms of engagement would need to be shared with the board of directors, and it will need to be copied to the audit committee as well, because it is an oversight board for the financial matters. Then the next question is it mandatory to get the audit engagement letter signed and acknowledged by the management of the entity? Now, friends, many a times there can be a situation that the auditor has prepared the audit engagement letter in accordance with the requirements of SA 210. He has shared the hard copy or the scanned copy with the management. However, the management has not shared the signed copy back with the auditor. What needs to be done if these kind of situation arises? So there is a clear clarification given by the institute. Let us read it out. As per the general clarification issued by the Auditing and Accounting Standards Board of ICI on Standards on Auditing SA 210, the terms of the audit engagements, the auditor and the client are normally considered to be agreeing on the terms of the audit engagement if the objective and the scope of an audit and the auditor's obligations are laid down in the statute or regulations governing the engagement. In such cases, it is not necessary that the engagement letter sent by the auditor is acknowledged by the addressee and returned to the auditor to establish that the client's understanding of the terms of the engagement is in accordance with the engagement letter issued by the auditor. It shall be sufficient compliance with the requirements relating to sending the audit engagement letter if the audit engagement letter is appropriately delivered to the client and the auditor retains the evidence for such delivery. In such cases, the audit engagement letter would be informative for the client. Example of such engagements include audit under Section 139 of the Companies Act, audit of public sector banks, etc. So friends, like I mentioned earlier, that the responsibilities, the objective of the audit, the responsibility of the management, the responsibility of the auditor is clearly spelled out in the Companies Act 2013, so far as the companies are concerned. So the management is expected to know the responsibilities, to know the respective responsibilities. So if in such cases, the auditor has shared the audit engagement letter, however, the management has not acknowledged or not shared the signed copy, then it would be enough for the auditor to have some kind of evidence of sharing this engagement letter with the management and with a note that this particular engagement letter was shared on so-and-so date. However, the acknowledgement has not been received. However, this will be a very rarest of rare scenarios where the management is not giving the signature on the audit engagement letter. Generally, in 99.99% of the cases, the management would agree and share the signed version of the audit engagement letter. Then, few questions like who can sign the engagement letter on behalf of the firm? Now, this question would arise in case of a partnership firm or LLP. The engagement letter needs to be signed by the partner, any partner of the firm or LLP. And in case of proprietorship firm, it will be the proprietor. It is but natural that the proprietor would be signing the audit engagement letter. Who can sign the engagement letter on behalf of the auditee? Again, a very important question. The response would be that the engagement letter needs to be acknowledged by the appropriate level of the management who have been conferred the powers by the board of directors in case of companies. In case of partnership firms or LLP, it can be signed by the partner. In case of a trust, it can be signed by the trustees. So typically in case of a company, if the board has given powers to certain director to sign certain documents on behalf of the management, on behalf of the board, then it can be that particular director who can sign the audit engagement letter on behalf of the board of directors. Then, in case more than one auditors are appointed to conduct the audit jointly and report on the financial statements of the entity, should each of the auditor enter into a separate engagement letter? So the question would be that if, say, for example, if there are two auditors, then the audit engagement letter would be separately executed by both these auditors with the management. Then the response is that as per SA 299 revised audit on joint audit of financial statements, the joint auditor shall obtain common engagement letter. So there will be a tripartite audit engagement letter, which will be signed by the management and it will be signed by both the joint auditors. So it will have to be a common audit engagement letter. Should separate engagement letter be sent to component where the audit of the parent entity is also the auditor of the component, for example, branch or subsidiary? Now, friends, when we say component, let us understand this term in practical parlance. So this term component would arise in case of audit of consolidated financial statements. In such case, the component would be, say, for example, subsidiary. If the auditor also happens to be the auditor of holding as well as subsidiary company, the question is whether a separate engagement letter be executed with the management of the subsidiary or not. Now, the standards and the guidance says that when the auditor of a parent entity is also the auditor of the component, the factors that may influence the decision whether to send a separate audit engagement letter to the component include the following: who appoints the component auditor, whether a separate audit report is to be issued to the component, legal requirements, degree of ownership by the parent, degree of independence of the component management from the parent entity. Now, if we understand the current legal framework in India so far as companies are concerned, the subsidiaries are a separate legal entity. The subsidiaries are required to appoint auditors by the management. The auditor has to issue separate audit report. So typically the auditor would issue the audit report of the holding company. He will sign the financials of the holding company. He will issue the audit report of the holding company. The auditor will also issue the audit opinion on the subsidiary. So after considering all these pointers, a separate audit engagement letter should be issued for the subsidiary also, because it is a separate legal entity and the auditor is going to issue a separate audit report. So friends, these were few of the questions which I wanted to cover in my presentation. What I would do is I have got a standard or sample audit engagement letter in case of a company, which I would be sharing on the screen, and we can go through because it will give us the practical flavor of how the engagement letter is prepared and what are the components of the audit engagement letter. So now I'll be sharing the standard audit engagement letter. It is basically an illustrative audit engagement letter, and it will have to be tailor-made for a particular situation of your client. So this is just the standard audit engagement letter. It is not complete in all aspects, but it can give some guidance. So I will now stop sharing this particular slide. Friends, I hope you are able to see the screen. Yeah. So basically, this is a illustrative audit engagement letter, which is an appendix to SA 210. Friends, you can see based on our discussion, you can recollect that it has been addressed to the board of directors, and then it also has got the address. So far as the address is concerned, normally we should give the address, registered office address we should keep. Then, like we discussed before, it also talks about the appointment letter. It gives reference to the appointment letter. So it says that in the first paragraph, it says that we refer to the letter dated. So it talks about the appointment letter. Then it says that let us focus on the highlighted areas. Then it says that you have requested that we audit the financial statements of the company as defined in section 240 of the Companies Act for the financial year beginning so and so and ending on so and so. So like we discussed earlier, that the engagement letter will have to be clearly spelled out the financial period for which the appointment is done and for which the auditor is going to do the audit. Then it says that the financial statements of the company would include the consolidated financial statements also. So if to an entity consolidated financial statements are applicable, then this paragraph will also come. Then in the second paragraph, it clearly brings out the objective. It says that our audit will be conducted with the objective of expressing an opinion if the aforesaid financial statements give true and fair view in conformity with the applicable accounting principles generally accepted in India. So when we talk about applicable accounting principles generally accepted in India, so in case of a company, it would be accounting standards issued under the company's accounting standard rules or company's Ind AS accounting standard rules. So, and it will also clearly spell out that the reporting would include reporting in conjunction whether the company has an adequate internal financial control system over financial reporting in place and the operating effectiveness of such controls. So the engagement letter would clearly say that the reporting would also be on the adequacy of the internal financial control over financial reporting and the operating effectiveness of such controls. It says, it talks about the responsibility of the auditors. It says that we'll conduct our audit in accordance with the standards on auditing issued by the Institute of Chartered Accountants of India and deemed to be prescribed by the central government under section 110 of the Companies Act. Those standards require that we comply with the ethical requirements and plan and perform the audit to obtain assurance about whether the financial statements are free from material misstatements. So friends, under the ICI framework, which is applicable to the members, there is an SQC and there are, which is an umbrella standard, and there are a host of standards on auditing below this SQC. So the code of ethics issued by the institute, the SQC, and various standards on auditing clearly spelled out the ethical requirements which the auditor needs to comply while doing the audit. So it has to be clearly spelled out in the audit engagement letter, like it has been mentioned here. The terms preference for my audit of internal financial control over financial reporting carried out in conjunction with our audit of the company's financial statement will be as stated in the separate engagement letter for conducting such audit and should be read in conjunction with this letter. So like I mentioned in my previous slides, that this is a normal general audit engagement letter. There will be a separate audit engagement letter for internal financial controls, and both these letters will give cross reference to each other. Then it clearly says that because of the inherent limitations of an audit, including the possibility of the collusion or improper management override of controls, there is an unavoidable risk that material misstatement due to fraud or error may occur and which may go undetected, even though the audit is properly planned and performed in accordance with the SS. So this has to be clearly brought out that giving audit opinion is not an absolute assurance or the guarantee. Then in the next paragraph, that our audit will be conducted on the basis that the management and the those charged with the governance, which is audit committee or board, acknowledge and understand that they have the responsibility for preparation of the financial statement. So again, the primary responsibility is for preparation of the financial statement is with the management. So this fact has to be clearly brought out in the audit engagement letter. Then it also says that the management responsibility is also with the compliance with the applicable provisions of the Companies Act 2013. Then proper maintenance of the accounts for preparation of the financial statements on going concern basis, preparation of the financial statement in accordance with the applicable accounting standards, selection of accounting policy and applying them consistently. So friends, we have got a standard, we have got a accounting standard on accounting policies, and it says that basically it will be the management who would be choosing the accounting policy. However, they have to be appropriate in the circumstances in which they are being used. Plus, the accounting policies have to be consistently used so that the financial statements become comparable. So this fact has to be clearly mentioned. Then taking proper and sufficient care for the maintenance of the adequate accounting records in accordance with the provisions of the Companies Act for safeguarding the assets of the company and for preventing and detecting fraud and other irregularities. So here the auditor is clearly specifying that it is the primary responsibility of the management for preventing and detecting frauds and other irregularities. Laying down internal financial controls to be followed by the company, and that such internal financial controls are adequate and were operating effectively. So again, it will be the responsibility of the management to establish internal financial controls, and they have to ensure that they are adequate considering the size and nature of the entity, and they were operating effectively throughout the year. Devising proper system to ensure compliance with the provisions of all applicable laws and other such systems. Identifying and informing me of financial transactions or matters that may have an adverse effect on the functioning of the company. Friends, as you are aware, the Companies Act casts responsibility on the auditors that if they find any transactions or matters which have any adverse effect on the functioning of the company, then the auditor has to clearly mention them in the audit report. So in order to help the auditor in identifying and reporting on those matters, the auditor is to clearly inform the management that if they find any events that has an adverse effect on the functioning of the company, then they have to immediately inform the auditor so that auditors can review those matters or transactions and give their opinion accordingly. Then identifying and informing the auditors of all the pending litigations and confirming that the impact of pending litigations on the company's financial position has been disclosed in its financial statements. Now, friends, these 3 bullet points are basically the requirement under the Companies Act so far as the audit report is concerned. So under the Companies Act, auditors required to report on the impact of the pending litigations on the company's financial position, the impact of material foreseeable losses on the long-term contracts, including derivative contracts, and if there was any delay in transferring the amount which was required to be transferred to Investor Education and Protection Fund by the company. So the auditor is clearly mentioning here in the engagement letter that please inform us of any such event. Then Point E, identifying and informing regarding if any director disqualified as on 31st March of that particular financial year from being appointed as director under section 164(2) of the Companies Act 2013. So again, the auditor in his audit report is required to mention whether there is any director who is disqualified. So however, how the auditor would come to know? So the management is required to inform the auditors. The management is required to provide such declaration to the auditor, and based on that, the auditor would be able to give his opinion whether any director is disqualified or not. Then the auditor says that in the engagement letter that the auditor should be given access at all times to all the information, including books, accounts, vouchers, other records and documentation of the company. Access at all times to the records of all the subsidiaries, because if you are going to do the audit of the subsidiary, then the auditor is duty bound to review the records of the subsidiary, and for which the auditor will require the access to the records of the subsidiary. Access to the reports if any relating to internal reporting of frauds, vigil mechanism reports, etc. So friends, now under the Companies Act and under CARO also, so there is a reporting requirements on fraud. So unless the company has installed vigil mechanism system, or if there are certain committees which are there in the company and there are certain reports in regard to fraud, the auditor will not come to it. So if there are such cases of frauds, and if there are reports by the vigil mechanism committee, or if there are some other committee, then the auditor should be given access to those reports so that auditor can understand the financial implication of those reports and he can appropriately report the matter. Additional information which we may request from the management and unrestricted access to the persons within the company. Then the auditor will also request, the auditor has to clearly mention in his engagement letter at the very beginning only that during the course of the audit or at the end of the audit, they will also request the management to give certain written confirmation regarding certain. So typical example would be that at the end of the audit, the auditor would be taking certain management representation letters from the management. So that request has to go at the beginning only, that during the course of the audit or at the end of the audit, the auditor would be seeking the management representation letter on certain aspects of the audit. Then the auditor would also mention that the audit report on the financial statements would be addressed to the shareholders of the company, and it is not addressed to the board of directors. So the board is helping the auditor in conducting the audit. Ultimately, the report of the auditor would be to the shareholders or the stakeholders of the company. Then 143.12 we have already discussed. And like I mentioned before that when the auditor reports to the government under 143.12, it cannot be considered as breach of maintenance of the client confidentiality requirements. However, this paragraph should be mentioned in the audit engagement letter. Then we discussed about the peer review. Then auditor's responsibility under SS 720. Then there is a cross-reference given for the engagement letter on IFC. And finally, the audit engagement letter would conclude with a request to the management that please sign and return the attached copy of this letter to indicate your acknowledgement of an agreement with the our audit of the financial statements, including our respective responsibilities. So finally, it would culminate with request to the management that please acknowledge this engagement letter and please sign and share the signed copy for our records. And this engagement letter would be signed with a member who would be giving his designation either as a proprietor or partner, name of the firm, the dating will have to be done. And in case of a company which has got a audit committee, the copy would also go to the audit committee. And then there will be an acknowledgement by the management. So friends, this was the format where there was also IFC applicable. And like I mentioned to you before, there is a separate guidance note on IFC which gives the format of the engagement letter which is to be given for IFC. There are certain paragraphs which are specific to IFC audit. However, majority of the matter is same as this general audit engagement letter. Let me check if I can share the audit engagement letter on IFC.
Hello.
Hello.
Can you hear me, sir?
Yes, I can hear you.
Hello.
Yes, I can hear you, sir.
Sir, you are through with your presentation?
I am through with my presentation. So if there are any questions, I can
Sir,
take the questions right now.
Yes, sir. Yes, sir. Yes, sir. I have received certain questions. If you allow, I will raise one by one, sir. So
Yeah.
first of all, sir, thank you so much for wonderful deliberation.
Thank you.
Thoroughly, as regards to this standard, I have gained a lot through your deliberation, as well as I hope our members have also gained through your deliberation, sir. Sir, first question is, as we have discussed in the beginning, as the banking season is bank audit season is near approaching, so every member is asking whether this standard is applicable for banks also, means to what and what extent this is relating to the banking industry.
Yes. So a very good question on this particular subject. So like I mentioned in the beginning that this is an engagement letter for any audit assignment. So this would typically be applicable to the audit of company, audit of banks, audit of insurance companies, different sectors. So
Yes.
the requirement of this engagement letter would also be applicable to the audit of either bank branch audit or central statutory audit of bank. So this requirement would be equally applicable to the bank audits. Now let me add one more point over here, is that every year the institute does a wonderful thing by coming out with guidance note on bank audit. And in these particular guidance note, they also give the illustrative format of the audit engagement letter, management representation letter. So the members, I would suggest to all the participants who are right now there with us to go through not only ASA 210, which we discussed right now, but also the respective guidance note. So in this case, guidance note on bank audit, there they will gain a lot about the audit engagement, what are the components of the audit engagement letter, and they can appropriately frame the audit engagement letter.
Yes, sir. Sir, as we all are aware that while issuing these engagement letters, and some terms and conditions are also levied by the banks. So, as far as the bank audits are concerned, so this engagement letter is must even for PSUs along with the all the terms and conditions.
Yes, so again, there is a separate regulatory framework for banking audits. So there are many regulations which come into play, like Companies Act, the Banking Regulation Act, respective Banks Act. So whether you are doing the audit of PSU banks, whether you are doing the audit of private sector banks, whether you are doing the audit of bank branch audit, you are supposed to execute audit engagement letter in terms of SA 210 read with
Yes.
guidance note on bank audit.
Yes, sir. Sir, in case of the statutory auditor, suppose in example, we are statutory auditor of a company, and due to the holding of this position, we are made to issue certain certificates to the client.
Correct.
In such situation, do we still need an engagement letter for issuing these certificates?
This is a very good question, NLJ. I must applaud the person who has asked this question. Now, let me clarify this matter here. The essay 210 talks about agreeing the terms of audit engagement.
Yes, sir.
During the course of our practice as chartered accountants, we have to also, many times we have to also do the certification on certain matters related to client. Now, there is a specific guidance note issued by the institute on reports or certificates, and in which there is a clear guidance given that if you are giving any certificates, then you will be following certain prescribed format for the issue of certificates. There will be certain items which will be there in the audit certificate, plus it will be a mandatory requirement on the part of the auditors to execute audit engagement letter. And it also mentions, hello. Yeah, and it also mentions what can be the components of the audit engagement letter. So ideally, if we can have a comprehensive audit engagement letter incorporating the client's needs for certification, we can have a comprehensive audit engagement letter which will include certification matters also, or we can have a separate engagement letter for issue of certificates. I have seen varied practice. Many chartered accountants are issuing separate engagement letter for issue of certificates, and there are certain chartered accountants who are also incorporating the requirements of this particular guidance note in their main engagement letter. However, to answer your question in summary, there has to be a clear engagement letter. There has to be clear recital of issue of certificates in the audit engagement letter, and what would be the responsibilities of both the parties. So engagement letter is mandatory.
Sir, it means, sir, in line to the same question, it means we cover such certification assignments in our existing audit engagement letter with an open-ended wording for covering all certificates to be done.
So sometimes, so again, it depends from situation to situation.
Yes.
Ideally, I would like to have a separate engagement letter for certificates, because the client may require certain certificates for certain matters. There can be certain certificates for income tax purposes, for bank purposes, or to be given to regulatory regulators. So, if there is a separate engagement letter giving reference to these requirements, then it is always appropriate to have a separate engagement letter rather than keeping the engagement letter as open.
Sir, in case of the internal audit, what is the remedy available when management refuses to provide the minutes of the meeting?
I guess this question is not related to our today's presentation.
Yes. It is not relating to our essay, but still, member has raised. I was wondering.
So basically, this question can arise in statutory audit as well. But to give the answer on this particular question related to internal audit, now,
so I will forward it to later on to you. Then we will take the concerned feedback, and then I will forward to the concerned member.
So just I'll just take 15-20 seconds for this particular question. So if minutes are not made available to the auditors, and if the auditor feels that there were certain matters which were discussed during the meeting, or by not getting the meeting, if the internal audit is getting affected materially on certain aspects, then he may have to mention this fact in the internal audit report. That is what, because internal audit is being conducted at the behest of the management. So then he will have to appropriately mention this fact in the internal audit report. Yeah, next one.
Yes, so one very common question generally asked by the members, whether the auditor's letterhead for engagement letter is mandatory.
Again, a very good question. Normally, as a practice, I would say as a practice, the audit engagement letters are given on auditor's letterhead. And why, I tell you? Because the audit engagement letter gets generated from auditor's office. Auditors prepare engagement letter, share it with the client, and they tell them that we have signed. Now you also sign and share us the signed version. That is the reason there is a practice that audit engagement letters are prepared on the letter of the company. However, we need to also understand that these audit engagement letters are basically nothing but some sort of an agreement or a contract between two parties. So in my view, if the audit engagement letter is also given on a plain paper where both the parties have acknowledged and signed it, it is fine. But as a practice, generally, we will find that the audit engagement letters will be on the letterhead of the practice form.
Sir, in the same line, if we raise the question in case of the joint audits, so we cannot take separate engagement letters.
Correct. So
Yes,
in case of joint audits, of course, because we just discussed that it will be a common engagement letter, so it will be on a plain paper only.
Yes. Sir, one question is relating to the non-disclosure agreements. If we talk about the NDA entered with the client, considering the business of the client, like if we can say the defense business, where there is an NDA agreement with them, so would it affect the terms of the engagement letter? And if the same, how to handle peer review and other issues also?
No, see, many clients have their own system of obtaining NDA from the auditors, and this is specifically a case in case of internal audits as well. Now, so far as the NDA does not restrict the access of the auditors for verification, it is fine. It should not clash with the requirements under various standards on auditing. At the same time, the auditor, like we discussed in the sample engagement letter in our presentation also, the audit engagement letter will need to clearly spelled out, or there is to be a recital so far as the peer review is concerned, so far as fraud reporting is concerned. It has to be clearly mentioned at the very beginning to the management that we will be subject to peer review, and the peer reviewer may verify our working files. So I don't think there should be any problem to the management, because this is mandated under the institute, mandated by the institute peer review process, and we all are duty bound to follow that.
Yes, sir. Sir, last question. Sir, who will be those charged with the governance in case of company under insolvency process? Whether separate engagement letter is required at the time of COC approval for the appointment of auditor?
Again, the question would depend on the circumstances. In my view, who is in charge of the governance at the time of insolvency proceedings, whether it is resolution, professional, or some kind of a committee, then the engagement letter would have to be addressed to them, because they have the power of governance. Maybe copy can be marked to the board of directors, but they will have to be kept in.
Yes, sir. So now we come to an end, sir. Thank you so much for your wonderful deliberation. You have taken all the aspects of relating to this standard and covered all the queries of the members. More than 1900 members are live and have gained knowledge as well as the expertise from your kind good self. So once again, thank you so much on behalf of AASB of ICI for sparing your valuable time and enlighten all of us on various intricacies on this standard, sir. Thank you so much, sir. Thank you so much.
Thank you, Anilji, for giving me an opportunity and to be with all our fellow members. And thank you so much.
Thank you, sir. Thank you so much, sir. Thank you.
Thank you.